13 states tax Social Security benefits. 13 states. Which are they? Well, stay tuned to find out because we can go over each and every one of those 13 that tax your own benefits right here at the Heritage Wealth Planning YouTube channel. So thanks for jumping on board. As always, if you like what you see here, don't forget to subscribe down below. Once you hit subscribe, hit the bell to be notified for future content. So let's dive right into it. 13 states, man, tax Social Security benefits. Now is what you might think, actually, because I actually did a list run by run on the video on my videos on the 50 states individual tax situation for retirees, and even the states that tax Social Security benefits is not that bad, but it'd behoove you to know, because if you're in one of those 13 states, especially once your income breaches a certain level, it could be painful. And as always, well, not as always. So a couple different websites I use. Motley Fool quite a bit. I like them. I use Motley Fool, Kiplinger's a lot. I like them, the Tax Foundation, and let's just go over the Motley Fool because this came across my my search engine here recently. Now this is about a year old or so, June 6, 2007, but it's still legit. And as always, when it comes to tax laws, my friends, there's never enough content because it always changes. Rhode Island just did a pretty significant tax law change last year. Kentucky just did a big tax law change this year. So there's always stuff happening. Has anything changed in regarding Social Security taxes in your state? Not that I'm aware of, but you want to make sure that the state you're in or the state you're moving to, what they do for Social Security taxes. Along those lines, look at your county when it comes to property taxes and sales taxes as well. I cannot stress that enough. When it comes to property and sales taxes, you're talking county, even locality specific is what you need to know. Okay. According to National Pollster Gallup, retirees show that 59% rely on Social Security to be their major source of income in retirement, with another 28% citing their benefits as a minor source of income. Well, that'd be nice, Social Security being a minor source, but the major source, the predominant amount of Americans rely on Social Security. Without Social Security income, quite a few retirees would be in a world of hurt. Let's just put it that way. But Social Security is in trouble. Now, we've talked about that. I don't sit there and the idea that we're never going to get our Social Security is, frankly, boggles my mind. It's fear-mongering. There could be a benefit reduction. Absolutely. That's not going to happen. There's no Congress in the history of the world that's ever voted to reduce your benefits. It's just not going to happen, especially when we know the voting age of people, the voting participation rate of Social Security benefits is much, much higher than those 25 years old. So we know where they're going to vote. We know the politicians got to pander to them. Hey, rightly so. You vote, you get the politicians knocking on your door. Makes sense. So if anything, they're going to raise the taxes on Social Security in the younger, or certainly raise the full retirement age, which is something I've been advocating for, my whole life. Beginning in 2020, according to the latest Social Security Trustee report, the program's cash inflow, including interest on its $2.8 million in spare cash, will turn to a cash outflow. By the year 2034, per the trustees, the program will have used up entirety of its spare cash, potentially leading to a 21% cut in benefits. We talked about that, and I won't get into that again. 21% cut in benefits in 2034, and then a 28% cut in benefits in 2091. Again, not good, but it's not anything to jump off a bridge about. However, this isn't the only concern for retirees. A majority of retirees will also pay federal tax on their benefits, and this is why I wanted to bring this article up to you, because I guarantee the vast majority of participants and beneficiaries of Social Security are ignorant about how that works. I guarantee, and thus they're going to pay more tax than they should. And taxes reduce what you get to keep. We talked about 1983, the first provisional that Reagan signed under a Democratic Congress. They enacted Social Security to allow the IRS to tax up to 50% of the benefits that individuals receiving, earning more than $25,000 a year, and couples earning more than $32,000 a year. A second amendment was added under Clinton in 1993, expanding what benefits were taxable. Up to 50% of retirees' benefits became taxable to earn income of $25,000 and $32,000 for an individual, and $32,000 to $44,000 for joint. That's the second round where they got the 85% of your recipients could be subject to income tax if you breach these two thresholds. And the funny thing is, I think they even talk about here, yes, they do. When these taxes were first rolled out in 1983, they were designed only to affect 1 in 10 Social Security recipients. Where have you heard that before? Oh, yeah. Old Josh right here on the Heritage Wealth Planning YouTube episode. Interesting. Back then, it was no big deal. Just like the net investment income tax that I wrote about in the book, Tax Bombing in Your Retirement Accounts. It's no big deal. It doesn't affect many people. It doesn't affect me. Why bother? Yeah. Now look, 1 in 10 were taxed under Social Security when they first rolled it out in 1983, and now a majority of recipients are taxed under Social Security benefits. However, since the income thresholds haven't been adjusted for inflation in the past 34 years, more than half of all Social Security recipients now owe at least some tax on their benefits. Yeah. And yet there's more. These 13 states add to the Social Security benefits taxation. In addition to the federal government collecting tax, 13 states tax Social Security benefits to a varying degree. As you'll see below, some states offer high income exemptions, which could only affect a very small percentage of the population. 4 states in particular mirror the tax schedule of the federal government without exemptions. And these 4 states could be considered among the least friendly for the purpose of Social Security taxation. There's Minnesota right there. And that's probably my number one least tax favorite state. Nebraska comes in there, but at least Nebraska gives you a break on Social Security. Minnesota, they hammer you when it comes to taxes across the board. It's in my top 5 and probably number 1, actually. Mirror the federal taxation for Social Security discussed above. Minnesota, North Dakota, Vermont, and West Virginia. West Virginia, one of the poorest, if not the poorest in the union. So that's not a huge issue from the federal taxation, because if you're married filing jointly with less than $44,000 of AGI, again, adjusted gross income, then you're not going to pay any Social Security tax. Now, Minnesota and Vermont, very more prosperous states, so that's going to affect a lot of people. The following 9 states, in fact, tax Social Security benefits, but offer some degree of income exemptions along the way. So remember, the 4 that follow the federal rules are Minnesota, North Dakota, Vermont, and West Virginia. Again, if you're married filing jointly with $44,000 of adjusted gross income, up to 85% of your benefits can be taxed. That's just a fact, and not just the feds, but that tax will go down to your state, whatever the state tax code is. And that will you'll be taxed as your state as well. Now, the states are generally a lot less than the feds, but still, you're going to pay tax on it. Montana's income exemptions actually parallel the federal schedule at 25 for an individual and 32 for a joint filer. However, what retirees wind up paying in Social Security taxes is lower than they pay federally or the 4 states mentioned above. Colorado, up to $20,000 of income in persons between 62 and 64 and 24 of income for those 65 and up is exempted from taxation. So again, if you get a pretty significant exemption in Colorado for income, which means you'll pay less in taxes to the state of Colorado to include your Social Security as well. New Mexico, Social Security benefits are partially taxable. Persons under the age of 65 can claim a deduction of $2,500, and persons above 65 and above can claim an $8,000 deduction. For seniors, the deduction limits are $28,500 for individuals and $51,500 for joint, and the tax rate is low from 1.7 to 4.9. So just remember, New Mexico, a little bit more in deductions before you have to pay taxes on your Social Security than the feds. Utah, yeah, they offer a credit of $450 per person. Utah's not great on income tax either, I got to tell you. So Utah offers a retirement credit of $450 per person for those aged 65 or older that can be used to offset any Social Security taxes paid within the state. And again, we want to credit more so than deduction. That means if you owe $450 in taxes to state and retirement income, you get a credit of $450, and now you don't owe anything. It's a credit dollar for dollar. If you're under the age of 65, you'll be offered a 6% tax credit on your Social Security benefits. Nebraska is bad. And Kansas, yeah, there you go. Kansas, Nebraska, the Midwest states. According to AARP's 2015 analysis of Nebraska, individual taxpayers whose AGI is below $43,000 and joint under $58,000 will be exempt from taxation. Again, that's better than the feds, that's for sure. Nebraska also recently indexes tax brackets for inflation as well. So that's good. That's good news right there. Meaning simple cost of living increases won't move Social Security recipients into a higher tax bracket in subsequent years. That's exactly what the feds have yet to do. Good on you for the state of Nebraska. Nebraska is not a great state when it comes to taxation for retirees either. Kansas, most Social Security beneficiaries in Kansas are going to be able to avoid paying tax on their benefits. The reason is that Kansas exempts taxing Social Security on persons with AGIs below $75,000. And that's the thing with most states that tax Social Security. They give you pretty significant AGI deductions before they start taxes. Kansas and Nebraska can attest to. Missouri offers the heftiest exemptions among those states which do tax benefits Individuals earning 85 in AGI and married up to 100 in AGI won't pay any tax. That's good. Again, the vast majority of Missourians are not going to pay any tax, so that's good too. Connecticut also offers some pretty generous Social Security exemptions, but considering that state also features one of the highest annual incomes in the country, a higher exemption limit makes sense. Individuals can earn 50 in AGI and married filers up to 60 in AGI without being subject to taxes on the Social Security. So in Connecticut, 50 and 60, that's not going to, I bet the majority of people in Connecticut pay taxes on the Social Security, which is probably why a lot of folks move. Rhode Island, next to Missouri, the exemptions in Rhode Island are the second highest in the country. Rhode Island exempts single filers with less than 80 and couples with 100,000. Remember, I did a video specific on Rhode Island. Rhode Island's a little bit, if you're not in making big money, over six figures, you're not going to pay much in taxes at all in Rhode Island on Social Security and otherwise. Just make sure you don't roll over your IRA. I'm telling you, you got to look at that. If you're in Rhode Island, you do not want to roll over your IRA. Or Maryland, you want to keep it in your qualified retirement plan, your 403B, 457, 401k, or TSP. As you can see from the differences above, where you retire matters. Choosing to retire in one of the 37 states that doesn't tax Social Security can just be one small step in ensuring that you can minimize what you hand back in taxes to the government. To some extent, states like Missouri, Rhode Island, Kansas offer generous exemption levels that most beneficiaries will fall under, meaning there could be smart retirement options for those states. But remember, Kansas and Nebraska, they hit you pretty hard on some other taxes too, and Minnesota does that as well. Rhode Island's pretty good, Missouri as well. But Kansas, Nebraska, Minnesota, those states are tough. So I hope that helps. 13 states tax Social Security, really only 4 that hit you very hard. And again, there's going to be North Dakota, Minnesota, particularly North Dakota, Vermont, and West Virginia. Those are states that tax Social Security according to what you pay for the feds. Everyone else taxes to some degree. Connecticut is probably the one that jumps out at me most because the income levels are higher. The vast majority are not going to pay much, if anything, in taxes on Social Security. But something to know about, especially if you're going to retire in Minnesota. If you like what you see here at Heritage Wealth Planning, subscribe down below, my friends. Hit the bell to be notified for future content. Please, the bell to be notified for future content. The book is still free today. So if you're watching this today, heritagewealthplanning.com, or go to Amazon, and type in Josh Scanlon. The book is free on Kindle. It'll always be free under Kindle Unlimited, but heritagewealthplanning.com. You can see all my blog posts, my videos, my podcasts, everything. And if you like what you see, of course, thumbs up always helps. See you next time. Thanks, guys.